By now, even if you've been living under a rock, you've probably caught wind of the cryptocurrency collapse. Billions of dollars of wealth have been wiped out in an instant, and experts are warning that a long bear season might have already begun. But could things eventually bounce back to the highs we saw just last year? Watch this video to find out. First up, how the crash happened. At first, things weren't this drastic. Sure, the price of Bitcoin had stopped growing at the same rates as before. In fact, it was actually slowly dropping, but no one thought this was reason enough to panic. Minor corrections happen all the time in such a volatile space. Then everything got flipped on its head. The Terra stablecoin collapsed, taking its companion token Luna along with it. In almost no time at all, both currencies were effectively rendered useless. Normally, this wouldn't have been a problem. Because of how many projects there are, every once in a while a cryptocurrency collapses and the market is fine. But Terra was different. It was worth over $50 billion at its peak, but by the end of the week, the value had dropped over 99%. Then it dropped a further 90%. Such a catastrophic failure sent reverberations across the entire cryptocurrency world, and the burning of so much cash, along with increased FUD, fear, uncertainty, and doubt, caused a market crash. Next, the Luna problem. So what exactly went wrong with Luna and Terra? The two were always linked. Terra was the stablecoin that Luna was based on. A stablecoin is meant to have its value stay static at $1. Most stablecoins, like USDC, are backed by actual fiat currency, but Terra was different. Instead of being pegged to real dollars, it was meant to keep its value stable using an algorithm. When the value of Terra got too high, it would be burnt to restore it back to its value. Likewise, if the value of Terra dropped below $1, Luna would be burnt to generate more UST to bring the price back up. In theory, this was supposed to keep a stable balance between the two prices. Of course, we now know things didn't work out. A massive quantity of UST was suddenly dumped into the market, causing mass panic and sell-offs of both Luna and UST, and the lack of reserves meant the crash couldn't be stopped once it started. All in all, Luna fell to 0.0000112 from its all-time high of $119. A coin with a massive 50 billion market cap had never crashed this hard before, and as a result, the whole crypto market went into a downturn. Now, the larger trend of economic downturn. Tech stocks in general have been slowly seeing a decline in growth. With the war in Ukraine and the global economy gradually coming to a standstill, investors are wary of projects with low profit potential. Also, crashes like Terra and scams in the crypto space have scared off potential buyers. Crypto has always been seen as more of a gambling get-rich-quick scheme than a legitimate currency, and this increased volatility hasn't helped that perception. Theoretically, currencies like Bitcoin are supposed to act like a hedge against inflation, but now that we're actually seeing inflation rise more and more, crypto holders are liquidating their portfolios because they can't afford to let their money sit. Can cryptocurrencies bounce back? Of course, no one can predict the market. There's always some risk that this is the time things are finally over. Crypto has suffered massive crashes before and come out unscathed, but something on this scale might scare people away entirely, especially when you take into account that this cycle had a lot of first-time investors in cryptocurrency because of the recent bull run. With their first experience leaving such a bad taste in their mouths, they're not likely to come back. The whole premise of crypto as a value store is that there's a constant supply of people wanting to buy more. You can't sell at a profit if there's no one to sell to. And now, with the supply of eager investors decreasing, that just might not be possible anymore. There is hope, however. The market is still huge, and every day more real-world uses for blockchain technology are developed. It's likely that as the economy as a whole recovers, so will the crypto economy. Of course, you should still invest smartly. All cryptocurrency is speculative to some extent, but altcoins are much more so. We don't even know if many of these smaller projects will still be around by the time things get rolling again. The safe thing to do right now would be to invest long-term in stable, established coins like Bitcoin or Ethereum and hold on for dear life. Eventually, the market will recover, and you'll get a substantial return on your investment. Now, let's talk about past crashes. The market has crashed many times before, and each time it has come back stronger than before. For example, back in 2013, Bitcoin was surging. In less than a month, it went from $200 to over $1,500, then the highest price yet. Then China banned them all. In about 2 weeks, the price had fallen by 50%. This was the start of a downward spiral, and the price even fell all the way back to $200 in 2015. It wouldn't recover the $1,500 all-time high until all the way in early 2017, and it was the first big crypto crash. Of course, after that, Bitcoin kept rising to reach the massive values we see today. More infamous, perhaps because of its recency, is the 2017 crash. 2017 seemed like an amazing year for Bitcoin, with the price increasing 2,000%, almost touching $20,000. Then it started falling. By the end of 2018, Bitcoin had fallen to around $3,000. That's more than an 80% decrease. And of course, there was the 2020 crash when the pandemic hit. After the crash, though, the price rebounded, and in 2021, it hit a new high of $60,000. The point here is crypto has been through massive crashes before, and every single time without fail it's touched new highs. So while this crash is unprecedented in its scale, it's probably not something that will kill crypto. Should you still invest in crypto? If you're patient, this crash is actually a great opportunity for you to make money. Nothing can be said with 100% guarantee, but chances are the big names like Bitcoin will recover. So with that in mind, now is actually the perfect time to invest. If you're willing to hold out for a couple of years or more, think of the crash as a sale. You can get cryptocurrency for cheap right now, and if the prices rise again, which they probably will, you'll get a substantial return on your investment. And plenty of other people are thinking this too, so that'll also drive demand and so increase value. The lower prices right now are also going to incentivize new investors to finally dip their toes in crypto. So if you believe in the utility of the technology and you do your research on what you invest in, you can potentially come out of this bear market having made a lot of money. Who knows? Maybe you could even join the increasingly expanding Crypto Millionaires Club. Now in other related news, Chipotle starts accepting cryptocurrency. The Mexican-themed food chain Chipotle has announced that it's going to start accepting cryptocurrency for payments. They'll be using the platform Flexa for this, also used by Starbucks for accepting crypto payments. With this launch, customers can pay using 98 different cryptocurrencies at any of the 3,000-plus locations across the United States. Chipotle is the newest member of a growing group of stores that are now accepting crypto as payment. This increasing adoption will lead to growth in the crypto market as more real-world use cases start appearing. Next, PayPal allows transfers of cryptocurrency. In another round of good news for crypto, PayPal has announced it's allowing users to move their holdings from other wallets to their PayPal account, or the other way around. This means people can consolidate their holdings into one central wallet, or those more security conscious can store their coins in a hardware wallet but transfer to their PayPal when they need to make a purchase. The announcement comes as the latest in a wave of steps by PayPal to embrace cryptocurrency. In October 2020, the company first started offering the functionality to buy or sell cryptocurrency using a PayPal account. Then in 2021, they launched Checkout with Crypto, which lets you make a purchase using cryptocurrency on any of the millions of stores you can use PayPal on already. This was an unprecedented step in mainstreaming crypto adoption, and now with a new transfer feature, the company has further expanded its presence in the market. Lastly, U.S. senators reveal cryptocurrency regulation bill. Republican Senator Cynthia Lummis has unveiled a new bill to regulate cryptocurrency in the United States. The bill demands that instead of the Securities and Exchange Commission, the Commodity Futures Trading Commission would be the regulator for crypto assets. Investors breathed a sigh of relief at this news, as the CFTC is known to be less strict compared to the SEC. The bill would also require that all stablecoins be backed up by a more traditional asset, like fiat. This would prevent future crashes like the one caused by Terra. For now, the bill isn't expected to pass in Congress because of the elections coming up, but if it's anything close to what future legislation would look like, crypto holders have little reason to fear legislation. That's a wrap for this video. See you in the next one.